Each and every single time I reevaluate AMC's chart, it always brings me back to the same exact spot. Every single time there are way too many things that tell me this is where we're trading at, this is where we're trading at, this is where we're trading at. Technical analysis can be a pain in the ass, especially when market makers are manipulating the stock, and we all know that. As of right now, I'm going to reconfirm where AMC is at. So without further ado, we have a lot of stuff to cover besides the technical side of things, such as some data that is rising with AMC, some things happening with banks, additional catalysts, and the overall market. So watch until the end of the video so you guys don't have to watch another update video here on YouTube. All I ask you to do is subscribe to the channel, join us on this journey to financial freedom. It is free. Engage the algorithm by liking the video and dropping a comment. Let's get into it. Back here, AMC, before the run-up in January of 2021, here are a couple things that I wanted to point out. This, from the bottom to this first leg up at the end of this blue cycle before we gapped and squoze and the buy button was taken away, this was a 167% move. If we take a look at back when we were tracking Ethereum Classic, this was a 285% move. So nearly double what AMC had done is what Ethereum Classic had done. So the macro is different from the micro, and this is what I wanted to talk about, and this is what I wanted to touch base on. The reason I wanted to touch base on this is because AMC has clearly sold off much further than Ethereum Classic, right? Ethereum Classic has been scaling slightly up. AMC has been nosediving off. However, the charts are still the same, but AMC has not dug itself out of the hole. So there are a couple things that I wanted to point out. The micro different from the macro. The macro cuts the percentage gains in half. AMC moves in half before the big moves up. And the reason the big moves up are different is because you can see from this AMC low all the way up to the squeeze in June, May was 3,652% of a total gain. If you look at Ethereum Classic and you come take a look, 3,679%. So basically the same exact move from the very bottom to that very peak. Now, stocks AMC has sold off much further. If we take a look, this was Ethereum Classic's low that we were tracking up to the relative peak that we just hit around 32 was a 123% move higher. AMC around that same exact time frame should have hit this bottom, right? Early September. Early September to that relative peak AMC hit was 61%. Okay, so Ethereum Classic had almost identically a 2x move from the bottom to the relative peak, yet AMC has sold off much further. But has it sold off double? And you cannot make this up. From Ethereum Classic's relative peak at $32 down to where it hit for a very bottom, right, was 32.06%. If we look at AMC from this relative peak right up here at $11.20, right, to the $4 mark, 64.74%. If this is a bottom for AMC, it maps out exactly to the micro, right? To the micro double percentage perspective from Ethereum Classic. So with that being said, what was the next move? If we take a look at AMC, from the bottom to the relative peak after that move was 952%. And yes, Ethereum actually matched this move 950%. So this is a macro move. The next two moves that are going to happen are macro moves. So what we want to see is you want to see Ethereum Classic from this bottom at $21.80 or so. Make that next leg up, whether that is larger than the last move or not. Based on the percentage gains, it is slightly lower, 285% move, 123% move, which means you would see about 400 somewhat percent move, and then a 200 somewhat percent move AMC just to start. Okay, that is the beginning. You're looking at $9 to $18.30 for that next macro move, and then the last leg higher. And for all of those who don't believe in the tracking, the charts play out identical. This is the weekly time frame. You can take it on any time frame, daily, 4 hour, 1 minute. They track, okay? That is where I'm sitting at right now. And as far as the barcoding goes, you can't really chart the barcoding. Now, AMC or Tex numbers has been rising from 11.02% free float yesterday to 11.13%. So more and more shorting is happening within the play. And yes, of course, it looks like they're trying to make it look like it's a real short interest, but they're clearly shorting it much more than this with fake shares. If we come over and take a look on AMC, also short exempt volume has died down from 175 to 112, but this was coming up from 59, which was down from 85, 88, 78. Okay, so either way, this is lower for AMC, but it's not low for any given ticker. So still pretty high, especially seeing that we're at these levels at around $4 and they're still dropping over 100,000 short exempts on it. Of course, we're getting cooked on the options chain for the week and a lot of premium is going to market makers. Now GameStop, if GameStop has the same exact cycle move and we do hit a double high, which doesn't look likely, and the reason it doesn't look likely is because it's tracking an inverse cycle from back in January. And the reason I think they're doing this is because if we made that double high, we would break out of the macro trend line and it would break the algorithm. Market makers are keeping this down and turning it into a reverse cycle to try and pin GameStop down from breaking out of this macro trend line. Okay, so that is just what we're looking at right now. GameStop, basically nothing happening on the options chain, pretty evened out to be honest for the week. Short exempts, very low on GameStop as well. Finally, credit spreads widen after banks. Bad loan news. Global credit spreads are heading for the biggest weekly increase in 4 months as bubbling property market stresses prompt banks to increase bad loan provisions. In quotes from the article, bad news stemming from banks' real estate exposure is coming thick and fast. Shares in U.S. regional lender New York Community Bancorp slid almost 50% over the past 2 days after it ramped up provisions for loan losses. Deutsche Bank AG more than quadrupled its U.S. property loss provisions. The article goes on to quote Goldman Sachs analyst that says, in quotes, for the first time since late October, market sentiment has turned markedly negative. Concerns are mounting about the potential pain for banks as elevated interest rates push down commercial property values in the U.S. and elsewhere and make it more difficult for developers in refinancing their debt. Now, this is scary, seeing that JP Morgan Chase, Citibank, as well as Goldman Sachs have over $203 trillion out in derivatives. The over-leveraging is the most dangerous thing that has been happening. It is a bubble that people aren't looking at, and it's happening with banks, it's happening with hedge funds, it's happening with short sellers. Finally, the U.S. economy added 353,000 jobs in January, above expectations of 187,000. The unemployment rate was 3.7% below expectations of 3.8%, which means that the U.S. economy has added jobs for 37 consecutive months. Despite widespread layoff, the data remains very strong, and the unemployment rate is at its lowest levels in 50 years. Could we actually be on track for a soft landing? Now, what happened last night? Because we touched on this. Meta, what the hell is going on? It went absolutely nuts. The Magnificent Seven are back at it again, except for Tesla. And honestly, this move is beyond what I expected. Meta is heading for $500, following Nvidia, following Microsoft, and I just can't believe it. Up 21.48% on the day. Let me know if you guys took some money out of this play. Let me know if you made some cash on this play. I wish I played it myself. Amazon, next up 8% on the day. Nasty move. Both of these have disgusting gap fills to the downside now that potentially will get filled in the near future, but we have to, of course, evaluate the charts. I'm just looking at it right now. These were insane moves that are, of course, propping up the overall market. SPY is trading at 493.66. Tapped over this level perfectly using this channel as support now. The top of this channel is going to be $500, which I think the SPY is going to hit over the next couple of days if momentum comes in. Watch the volume. You want to see volume increase, and I think the SPY is going to push up to 500 before scaling back down and trading in the top of this channel. Tesla looking bearish once again, 183, down 3% on the day. This stock just won't dig itself out of the hole. And as of right now, this is extremely, extremely bearish looking at Tesla. I'm watching for around the 165 range, 168 range for Tesla to come down to. And then this zone ultimately between about 145 and 155. Now, Tesla's latest screw up involves making the front size of its braking system too small. U.S. Auto Safety Agency upgrades probe into Tesla power steering loss. And Tesla recalled 2.2 million cars as a result. Nearly all of its vehicles sold in the US over warning light issue. Overall, very, very negative news, negative catalyst for Tesla, and it seems as if these are coming out back to back to back, and this thing just won't prop itself higher to join the Magnificent Seven in the latest rally. However, despite all of this news, I still think it's an undervalued play. Now, Plug Power CEO says he's going to surprise short sellers. He's going to shock short sellers. Just remember that when PayPal said he's going to shock the world, the stock ended up falling and nothing really happened. So this is sort of the buy the rumor, sell the news type of deal. Yeah, I'd probably get out on whenever this guy says he's going to drop something. Not financial advice. I'm not a financial advisor. Also, here's the earnings for the week ahead. Palantir, PayPal, Alibaba, Snap, ton of other plays that we will be talking about in Discord. If you guys aren't in Discord yet, join it. The link is under the video. It's also pinned in the top of comments. I'm in there on the daily. Come talk stocks with me, as well as 500 of the most amazing people. Best vibes in Discord. It's a coffee a month, and you're grandfathered in at whatever price you got in at. So the first 150 people that got in for free are in there forever, and then the next set of people were in for $1.99, and now we're sitting at coffee a month. Do it. Level up your trading journey. Join now before it's too late. Copy my trades with a click of a button. Post your gains, post your losses, etc, etc. Also, guys, if you want up to 15 free stocks, each valued up to $2,000 per stock, 8.1% earned on your cash that is uninvested without any sort of risk, use my link, sign up for Moomoo, and make a deposit into your account. Once you do that, you're also getting level 2 order book data for free, so you can see where whales are loading up and dropping off shares on your favorite tickers, a customizable earnings calendar, and overall, the notifications are the reason I really like Moomoo, and I stand by that. That is it, guys. I love you all. Lottery Stocks out.